I'm Michelle Makori, and we are back with Frank Holmes, Executive Chairman of Hive Blockchain Technologies and CEO and CIO of U.S. Global Investors. All right, Frank, you straddle the world of crypto and precious metals, and both are seeing interest on concerns of money printing, dollar devaluation, and inflation. Now, gold has been advancing slowly, breached 1900 this week, and CME futures are showing more inflow into gold. But do you think that the reason gold is not really rallying as much as you'd expect is because we may not be getting an accurate reading of inflation from official data? Because it does seem as though inflation is here and a lot higher across the board, and it doesn't really seem like that is being indicated by the CPI data, for example.
I've been writing about this for over a year, that inflation is extremely understated. And I even have a little video to explain why. The CPI excludes energy and food. And if you just look at those costs, also the transportation costs and logistics because of COVID and tariffs that we've had to deal with, it's warped the world. It's going to take another couple of years before this really settles down. So we're going to see, and if you had real inflation numbers like the old CPI number that used to be the stable number, inflation's running at 12%, according to our numbers. So I think the 10-year government bond, if you can borrow cheap, buy it. Secondhand cars are up 25%. Housing, I was just going to build a new house. So it was going to cost $1.2 million to build this new house a year ago, before COVID. Now it's $3.5 million. I'm not going to build. I wouldn't buy a new one because I can turn around and not wait 2 years to build because the cost of lumber's through the roof. I think that inflation is massively understated, and it's going to slowly, like gold, come out. Gold's going to get its reset button. I stick to my number. In 3 years, it'll be $4,000.
Gold at $4,000 in 3 years' time.
Yeah.
All right. Well, you know, the Fed is very much still trying to downplay these inflation concerns. We had the Fed vice chair saying this week that the Fed will be able to curb an outbreak of inflation and engineer a soft landing. Do you think that's likely?
Well, they're always going to try to talk it down because the economy still is pretty sensitive. The thawing of COVID hasn't really stopped. Europe is just trying to unravel. Canada's a disaster. I mean, I can't go back to Canada with a 2-week lockdown and spending thousands of dollars at a hotel. It's foolish. And I think that as it thaws, people are still being too quick to shut down the economy. So the federal government here is very concerned about that. And that's why they're trying to tiptoe around this issue, but they can't stop this. This is big inflation coming, and real assets are the place to be.
So let me get this straight. Inflation is inevitable. You're putting your money into gold, Bitcoin, Ethereum, and break down what those other real assets are.
Well, I own real estate, and I own a fair amount of it. So I think income-producing real estate. Hopefully I don't have much development I have to do because it's going to be very expensive. I bought another secondhand car that didn't have much mileage on it because I think in 18 months the prices could be up 40%. Because the new steel prices are going to all of a sudden start to come into the cars when they can increase production of it. So I think anything that's a real asset, buy silver coins and give them away as gifts. This is the best gift.
I take it.
It's a natural to give your grandchildren, your children, your nephews, nieces. You buy them because they're just going to up in value. Last week when I was at the Nike outlet store between here and Austin, there's no change, no pennies. They say due to COVID, there's a shortage of pennies and dimes and nickels and quarters. Guess what? That's just huge when you think about real assets like silver.
All right. So, Frank, focusing back on gold, and I want to circle back to your gold target there because you're calling for gold at 4,000 in 3 years' time. But what gets it there? What are the triggers that could send gold past the 2,000 mark? I mean, what needs to happen along the way? What Fed or government policy or data, for example, could get gold there?
a change in the CPI number to reflect what real CPI is that you and I feel when we go to the grocery store, we fill up our tank of gas, or we have to go to Home Depot to buy something to fix up the bathroom or kitchen. There's a sticker shock there. So I think that the CPI number should be reflecting more of that. And there'll be a protest and complaint about it. And then there'll be a modification. And then all of a sudden, oh, darn, inflation's high. Government bonds will start to rally. But right now, you want to be buying anything you can. Get a cheap mortgage. You can get less than 3% for 15 years in the U.S. Get it.
All right, I do want to focus a little bit about U.S. government policies and Democrats and Republicans still going back and forth over the so-called infrastructure bill. But Democrats are indicating that time is running out, and look, more likely than not, they will be passing a version of it one way or another. That is expected to create increased demand for silver and copper as part of the decarbonization going green movement. Do you think, though, Frank, that those prices, that's already been priced in to silver and copper, that it's already accepted that this infrastructure bill is going to happen?
No, I don't think it is. And I think that there's still much more wrestling, and now they want to double the size of the IRS. That's really big for the unions, the government, the union bosses. And that would be a real drag on the economy. So I think there's going to be a big pushback with the Republicans to get that, along with some of the other negotiations taking place. You have to remember that President Biden did not win by a wide margin, not like Obama. I mean, Obama just skated in with this massive win in Senate and Congress, wherever he went, but not Biden's thin. So he's got to be very careful of what takes place in the first 2 years to solidify that political party when they go up for the congressional elections, because there's only a 2-year cycle for Congress people. And so I think we're going to just lots of haggling back and forth, and it's showing up in the market. And guess what? The stock market going up, it's creating wealth. And you're seeing another shift that's really important that Michael Saylor has done. He cannot grow his business, 500 million in revenue, EBITDA of 75 million. He says, I can't grow it at 23% the way money's being printed. So I'm going to use my balance sheet, and I'm going to buy Bitcoin, and my profits are going to come from, in addition to my business over here, from owning this. I think we're going to see the smarter gold stocks that have free cash flow stop selling their gold. That is what the smart ones are going to do. They're going to turn around and say, I'm going to make more money having this on my balance sheet, and part of my profits are going to come from the rise of that asset. And I think that that's going to be an interesting big sea change that's going to happen as we go forward in the next year.
So you're saying that you're going to see more companies take their cash reserves and A, put it into gold.
Yes.
And or B, follow Michael Saylor's lead and put it into Bitcoin.
You're going to see them say, how can I use my balance sheet to keep my revenue growth? Because now it's mark to market each quarter. And if we start getting strong inflation and you have lots of real assets going mark to market each quarter, you're making money. It shows up in earnings, and the market plays on earnings. So how do you do this? I think it's brilliant what's going on. There's a shift, like a new technology taking place, of how do I drive my revenue line and my earnings line. And people are taking a look at before you never did this. You kept your building, everything else, sort of a long-term asset. A lot of these accounting changes have ushered in going mark to market. So I think that we're going to see lots of different changes. The best, though, Michelle, would be the gold mining companies waking up that have free cash flow. Why do they sell? If they have free cash flow, they should just put it in the bank, because it's too cheap to sell at this price. It's worth $4,000. I personally think it's worth $10,000. I think if you looked at other parts, but the new millennials in the digital world, they're catching on much faster. I forgot one last thing is gaming. Gaming's dominated by these young millennials. The best ones have been getting digital money now for 20 years. And they upgrade and they upgrade. So they're used to digital money. So the idea of Bitcoin and Ethereum, it's in their blood. It's not foreign to them. It's my age that is so reluctant to embrace what's going on. But this millennial group is going to grow, and they were so profound for my other funds, like my ETF Jets. Jets last year was $40 million at the bottom. It's now $4 billion. Who ignited that? The Robin Hoods, 25,000 of them bought little pieces. And when those minnows come in, the whales came in, the institutions started buying, and all of a sudden the volume, it grew. So we now have price discovery by millennials. And I think that this is really important in the overall ecosystem. And that's a big game changer from 2 years ago.
Well, Frank, the problem with you is that your expertise ranges across far too many topics. So we're not going to talk about your other ETFs. We just wanted to keep it focused on Bitcoin, Ethereum, and precious metals today. And I'm going to summarize, if I may, by saying that it sounds to me like you're very, very bullish on Bitcoin, Ethereum, gold, and silver.
Absolutely. 10% into gold and gold, good quality gold stocks, 2% into the crypto world. And I have many gold investors that use Hive because it trades with it as a proxy. So that's become that way. But 2% in an alternative asset class, I think is just wise.
All right. Well, words to the wise. Thank you so much, Frank. Really appreciate you joining us. Frank Holmes, thanks for joining us here at Kitco.
And I look forward to seeing you next week.
We'll see you in Miami. And thank you for watching. We'll see you soon. Keep it right here.